David has been paying $773 a month for his truck. Every month. For 4 years. That's $37,000, almost the price of the truck itself, twice over. Today, he called the bank to ask one simple question. How much is left? The answer didn't make sense. He owes more than what he originally borrowed. 48 payments, and somehow he's going backwards. By the end of this video, you'll know exactly how that's possible, and whether it's happening to you too, right now, without you knowing it. Hey everyone, welcome back to Finance with Mark. What happened to David isn't rare. It's actually the normal outcome of how car loans are built in America today. And by the end of this video, you'll understand exactly why and what you can do about it. Let's go back to the day David bought that truck, because that's where this story actually starts. Before that, let's have a quick disclaimer. 3.5 years ago, David needed a truck for work. He found one he liked, a maroon Ford F-150, used about $34,000. The dealer ran the numbers. $34,000 loan, 72 months, $773 a month. David did the math in his head. $773 fit his budget. He signed. What David didn't know, what almost nobody is told at that moment, is that 72-month loan wasn't designed around what the truck was worth. It was designed around the monthly payment the dealer thought David could afford. That's called payment-based selling. The loan term gets stretched, not to save David money, but to make the monthly number small enough that he says yes. Here's what nobody explained to David in that dealership. Car loans use something called amortization. And in the early years of a long loan, almost none of your payment touches the actual amount you owe. In David's first year, over 2/3 of every $773 payment went straight to interest. Not the truck, the cost of borrowing for the truck. Meanwhile, the truck itself was losing value the moment David drove it off the lot, about 20% in the first year alone. This is the moment David crossed into what's called being underwater, owing more on the loan than the car is worth. And once you're underwater on a 72-month loan, it can take years to climb back out. And here's the part that makes this David's story, but also millions of other people's story. Americans now owe $1.6 trillion in auto loans. That's more than the entire economy of most countries on Earth. The average new car payment is $773 a month, the exact same number David's been paying. And loan terms have stretched to nearly 6 years on average, not because cars got better, because this is the only way most people can afford the sticker price anymore. And when people fall behind, it's not because they're irresponsible. It's because the structure was never built to be paid off easily in the first place. Now, here's the part that matters most. David's situation isn't hopeless. There are real, practical things he can do right now. First, refinancing. If David's credit score has improved since he bought the truck, he may qualify for a lower interest rate. Even a 2 to 3% drop can save thousands over the life of the loan. Second, switching to bi-weekly payments. Instead of one payment a month, half a payment every 2 weeks. Over a year, that quietly adds up to one extra full payment, directly reducing the principal faster. And third, if David ever wants a new car, the most important thing he can do first is find out exactly what he owes versus what the car is worth. Remember that number from the start. $37,000 paid, but owing more than he started with? Now you know exactly why. The 72-month term, the interest-first structure, the value drop. None of it was an accident. And here's the uncomfortable part. If your loan is 60 months or longer, there's a good chance the same math is working against you right now, even if your balance looks fine on paper. That night, David did one thing differently. He wrote down 3 numbers: his interest rate, his balance, and what his truck is actually worth. Took 5 minutes, changed everything about how he sees that monthly payment now. If you've never compared those 3 numbers for your own car, that's where I'd start. Today, not someday. Next video, the moment your paycheck hits your account, there's one step almost everyone skips, and it's the difference between staying broke and finally getting ahead.